Panel is Then and Now, Fintech's New DNA. And we've got Mike Sigal, who is a globally recognized expert on fintech innovation. And he's the CEO of 20022 Labs and a startup advisor. So welcome. We have Jordan Harry, who is the VP.
No. He's got a cough.
Oh, okay, got it. No, he's here.
Okay, cool.
Yeah.
You were a quick recovery. Well done.
We tried to throw you off. So Jordan Harry is the VP of Investor Relations of Phoenix Community Capital. He's a successful TEDx speaker and a crypto investor advisor. Jim Chu is an entrepreneur. Oh, sorry. Jim Chu is an entrepreneur, investor, and philanthropist, and he's working to drive equitable economic growth in global emerging markets. And he's the founder and CEO of Untapped Global. And then finally, we have Justin Dunn, who is the COO of e-Cobalt Investing, and he co-founded Taiki Digital Investors in 2021.
So the title of this panel, Fintech Then and Now, we're actually going to change that a little bit. And we're going to talk about Fintech now and the future, tomorrow. Because what do we want to talk about? We all want to know what to keep our eyes on. We all want to know what we should be investing in. We all want to know what should be on the Linqto platform. So I think the very opinionated panel here, myself included.
We have no opinions, come on.
Brings a tremendous amount of expertise on this topic, and hopefully we'll all gain some insights on what we should be investing in, what we should be looking at now and for the future. But before we jump into that, I'd like to just do a quick introduction. So if every person can talk 1 or 2 minute introduction about yourselves and what expertise you bring to the table, and then we'll get started with the first questions.
I guess I will go first. So thank you, and lovely to be here. I am a new Lisbon resident as of 2 days ago, so getting to enter this environment at this event is really special for me, so thank you. So my background, coming from Silicon Valley, 7-time entrepreneur with a couple of minor exits and a couple of minor failures. Entered into the fintech field in 2010 by helping Swift, the global payment network, figure out how to bridge between their 10,000 member banks and emerging startups. So I got to see both sides of the equation. Was working on my 8th startup, which was my first fintech startup, when I decided not to go forward with that and became a fintech general partner at 500 startups. Our fund did 88 investments in 26 countries. And I just got the recent update data. We are a top decile return fund now, which is great. Left that, and since then have been splitting my time between advising startups, advising banks. For example, I sit on the investment committee at Standard Chartered Ventures, which is the corporate venture fund for Standard Chartered Bank, and advising funds. And my next trick, being here in Lisbon, is to take advantage of some of that Portugal 2030 opportunity and begin to share some of the companies I advise in SPVs. Maybe eventually they'll make it to the Linqto platform.
Thanks. And do you have investments in Africa?
Huh?
Do you have investments in Africa?
We do. Chipper Cash, which is probably one of the top performing fintech companies in Africa, was one of ours.
Congratulations. Jordan.
Boa tarde, everyone. My name's Jordan Harry. I'm a mama's boy. That's the first thing you need to know about me. I'm proud of that. Although when I was 10, I used to have a speech impediment. So I could never say words that start with an F or an S, which I can laugh about now, but kids are quite mean, at that age, which meant that I never loved doing this. But my mother, she dragged me to speech therapy against my will for months until I was able to articulate myself and become a lot more confident communicating. But what I found at school was they didn't teach you how to learn. So at the age of 18, I started a speed reading and memory training company. And there's not many people that look like me teaching that. However, the pandemic put a little bit of resistance in my life, and it showed me that I wasn't financially literate. And for me, crypto was that gateway, to break away from the shackles of wage slavery. And so crypto grabbed my attention. I applied my ability to learn anything faster to crypto. And now I take it as my proud job to share that passion with as many people as possible, to show that if you don't understand the language, then you fear it. And if you fear it, you don't get involved. So now at Phoenix Community Capital, we help small investors invest in VC by getting access to our platform, and they get a percentage of the profits that we make from our investments. Although I'm on stage with some titans right now, we do all that hard work for them whilst I have conversations with these guys. So that's who I am, and thank you for having me.
Hard to follow that one up. But again, really excited to be here. Thank you to Linqto, Kareem, and your entire team for having all of us. My name is Justin Dunn. I come from San Francisco, California. I'm coming from more of a real estate, a very traditional background, an institutional real estate company. We are currently looking to democratize, although I don't like that word that much, to increase the access to institutional, professionally managed real estate assets that provides opportunities that are different than a traditional REIT would. So lowering transaction costs, increasing the efficiency of those transactions, leveraging a concept which many of you may know and some may not, smart contracts to do that. So essentially what that means for all of you, we are trying to increase your ability to invest alongside institutional private equity firms or large real estate groups, and give you guys access to be able to invest in those opportunities with higher yields and lower costs. And then I also am a co-founder of, which is kind of a side project, but it's still a big project, of a digital asset management firm called e-Cobalt. And that is a digital asset management firm. Basically, it's a hedge fund that basically we coded an algorithm to trade the volatility of the space, which, as many of you guys know, the space is incredibly volatile. So there's a lot of opportunity there. And what we do is we exploit inefficiencies. And so we look for that volatility and try and provide our investors with low risk but high return opportunities in that volatility environment. So that's my background.
So when is e-Cobalt going to get on the Linqto platform?
That's a great question for Kareem. Yeah, when can we offer this to you guys? That's a great question. So actually, we haven't opened it up to anybody else. It's been our own capital this whole time. So our founding team and our close family and friends have been the only ones that have had access to this to date. So we're excited to potentially be able to offer that maybe on Linqto, but to offer it to you guys.
Sure. Great, and my name is Jim Chu, and I'm the CEO of Untapped Global. And my background, I've been in tech since the early 90s. I started investing as an angel in the early 2000s, but in the last 12 years, I've focused exclusively on emerging markets, and in the last 5 years, almost exclusively on Africa. I'm a big believer in the fact that Africa is going to be or is today even, the crucible of innovation for the next 20 years. And if you're looking out 10, 20 years, that's where you should be investing. That's where I put my money. I run a company, Untapped Global. We make private investing in emerging markets easy and profitable. We essentially want to make investing in Africa mainstream. And so that's what we're doing as a platform. So on with the first question then, the question that I think we all want to know, even if we don't admit it, which is, where should we be investing now in the next 5 years? So the question to everybody here, and I think we're going to do this, we're going to keep the first half to the panel, but then I actually would like to open it up to the rest of the audience here, because I'm sure there are insights and expertise in the audience that would be really interesting to hear from as well. So going along the lines, and feel free to jump in, but let's start with Mike. What area of development, what product in the fintech blockchain space would you be investing in right now?
So it's hard for me to answer that without giving just a little bit of context. So if I may, Fintech to me means innovation and driving down the costs in financial services. Since 2010, Fintech has been the largest consumer of venture capital of any industry. Something on the order, I was looking it up, 758 billion. And just last year, you had, where's my number, 132 billion in. Well, now what has that produced? Well, last year, the S&P increased by 10% overall, and Fintech was 97%. So there's been some progress made in bringing new investors value out of disrupting the way that financial services works. Fintech 1.0, which sort of started in 2008 with the financial crisis and the introduction of Bitcoin, was really about creating some new end user experiences. And you may know companies like Wealthfront or Robinhood or SoFi or Klarna, but there wasn't really a lot of innovation in the core of financial services. Fintech 2.0, which is sort of the last 5 years, you saw the rise of standardized APIs to allow access to financial infrastructure. Words like banking as a service, companies like Plaid and Stripe and Railsbank. And what that allowed was really new business models and new brands to grow up. And you know, whether you know it or not, you know a lot of them, and I could go through them for you. You also saw this rise of big consumer brands, Google and Facebook and Amazon, beginning to add financial services to their overall product catalog. Interesting fact, you have all heard about the Apple Card. Does anyone know about the Apple Card? So when the Apple Card launched, which was backed up by Goldman Sachs, the CEO of Goldman Sachs was not allowed on the stage. And Goldman Sachs investment bankers had to give up their bonuses to pay for the development of the Apple Card. So a really interesting shift in brand equity and business models. What you have now with the advent of DeFi and Web3, whereas before we had marketing and customer experience, and then we had the beginning of new business models. What now you have is a wholesale re-architecting of how financial services are delivered. So think about, instead of buying enterprise software, instead of renting time and energy off of Amazon Web Services as a financial services provider, you get to use DeFi and Web3, which brings down the cost of delivery by 2 orders of magnitude. That's a really amazing opportunity. So on top of that, if you're thinking about the businesses that I'm excited in, right? There's a lot of innovation just in that core infrastructure. There's a lot of innovation bringing that infrastructure to traditional financial services customers. For example, one of the companies I'm working with in my first SPV does automated treasury management for mid-market companies, which is a $2.6 trillion completely underserved market. And then you're gonna start to get what some of these guys are gonna talk about, these amazing new financial products that allow you to diversify your portfolios, like we heard earlier about wrapping revenue streams in around property in the metaverse. Or there's a great actual NFT use case that I heard about where Breitling, the watch company, issues an NFT with every watch. And what that allows them to do is go into the insurance business where they can sell you insurance at the time of sale. That's some fascinating stuff to me. Sorry, it was long-winded, but.
No, very relevant to hear about the history. So what company should be on the Linqto platform that isn't on there now?
Well, most of the companies I deal with are probably a bit too early for the Linqto platform.
In the next 5 years.
Well, I've got a guy who was my EIR at 500 Startups. They're a company called Unit that does banking as a service for marketplace brands. They announced their Series C of $100 million yesterday after their Series B, which was 6 months ago. So that's going to be one of those, and that's a now unicorn, $1.5 4 billion market cap. So it's getting into the range where it qualifies for a Linqto. I think there's a lot of others as well.
Gotcha. Jordan.
I actually changed my answer yesterday for a good reason, though. I was on the boat trip. Anyone else on the boat trip yesterday? Yeah, I just about made it, survived. And I was speaking to a gentleman called Haim. I don't think Haim's actually in the room, sadly. And he was telling me about his fears of him passing away and what implications that would have for his family. Because everyone in this room, we look after our own investments. But how many of our friends and families and loved ones would understand what to do with them when we die? Not to get too morbid, but understanding that that is a guarantee and that that's our responsibility to make sure that at least one person in our family or friend group know what to do with those numbers. Because if you're in crypto, if you're invested in Linqto, you know that in the future, those numbers will appreciate. And the last thing you want to do is have your family and friends looking at that screen and they don't know what to do with those. So my advice would be to look for a company that is solving that problem, because we all understand you want to invest in a company that solves a problem.
And that problem is, how do we deal with the end-of-life financial estate management, but not necessarily rely on a lawyer or a service, but do it digitally?
Yeah, and I know of one company, and I'd love for, if anyone knows of them.
Into.
Oh, perfect. Safe Haven?
What are the two?
No, okay. I know of Safe Haven. Oh, you know about Safe Haven?
Yeah.
I'd love to pick your brain about that. So I know of Safe Haven. So I'm now sat here saying, yeah, please, can we all do our own research, find companies that are solving this issue, because it's one of those things where we don't know when we'll need it, but prevention's better than cure. So Safe Haven, we'll definitely speak more about them and who they are and how they actually work and how effective they are. I would love, though, for everyone to consider at least speaking to your partner, having that difficult conversation and showing them how to access your wallets, how to use recovery phrases, how to buy and sell. It's a difficult conversation, but it's one which I think is an investment well needed.
Is there a company out there that does that today, meaning help you manage exactly what you're saying, right? If I pass away suddenly, where are my accounts? Where are my holdings? Does anyone do that today?
Yeah. So there's one we invested in a while ago called LifeSite, and what they do, instead of the interaction with your partner, it's the interaction between child and parent. So it facilitates wealth transfer. And they're kind of like a well-structured Dropbox in that you upload all the documents, it parses them, it creates the various triggers for, if it's kind of a digital dead man switch. If parent doesn't log in periodically, it releases all the information to child. It's all well-structured there, right? That kind of thing.
I got to get on that one.
There you go.
I just turned 50, it's time.
Yeah, I appreciate that. And I liked your point about being here and how your answer was informed by maybe a conversation that you had earlier. I'm going to branch off of you and not to copy you, but say the same thing, that I was speaking with Matthew Lemerle, who kicked this thing off, which he did a great job of getting us active, raising our hands and speaking, because it was a bit of an early morning for some of us. But I was speaking with Matthew last night, actually, and we were talking about the point that was also brought up by someone earlier this morning in regards to liquidity. You were talking, I believe, asking Kareem a very tough question about buy, hold, and sell. And I could tell that was a hinge point. But when Matthew and I were talking last night, it really resonated with me, and I saw it as this is maybe my most exciting opportunity, because I hear the marketplace wants that. And what you guys are saying is, not only do I want to have the ability to maybe get into a real estate opportunity or an NFT or something that I wouldn't normally have access to, right? There's that first piece of access. How do I get into that opportunity if I don't know somebody? And that's like what Linqto is trying to facilitate, to give that access. But then there's the second piece of the equation, which is, now that I have that access, now that I've made that investment or that decision, what do I do next? How do I make that investment liquid? What is the lockup period? Like, these are the questions that you guys should be asking when you're making an investment. How long do I have to have it in? What happens when I take it out? And maybe it's because of a safe haven type situation where maybe you're talking about generational wealth, and God forbid something happens. You want to know what the exit strategy is. And so for me, what I'm really excited about is that space. And what I'm doing now with a very traditional institutional real estate company is saying, how can we both give people access that they wouldn't normally have to invest alongside institutions that have been doing great due diligence for decades in this space, but also give you guys the power to be able to do something with that. So now you have the tool, you're on the platform, you have the app. I can make a decision to sell to somebody else on the platform or someone else from Linqto, and you guys then have the ability to make a liquid decision. So that's something that I'm really excited about. That's just a broad category that I think is a huge opportunity for growth in the next few years.
I just want to second that, and I really appreciated Kareem's comments earlier this morning, or Matthew's as well. I mean, I think equity investing, whether it's early stage or growth stage or even pre-IPO, it's a tricky asset class because if you're doing early stage, it could be 12, 13, 14, 15 years before you see that money back. And not that many people have the luxury of being able to sit on that for so long. If you're able to create liquidity out of real estate holding or your equity holdings in early stage companies or otherwise in a very efficient way, right? Not, hey, buddy, you want to buy my shares and whatever, but in an efficient way, I think that's a game changer, because then it puts private investing in the same category as public investing in terms of liquidity and not just access, but also the ability to monetize what you own.
Yeah. See, I think that's exciting because it increases the velocity of funding to innovation, right? If we are all willing to take a bet on something that's early stage and we have a way to get our money back out, the likelihood is we're going to take that money and put it in to the next cool entrepreneur. And again, that I just love.
And again, we use this word a lot, democratization, right? Access and so on. But I think that's a really key point, because the people with a lot of money can just sit on money and not do anything, right? And they can wait the 15 years for venture to exit. Most of other people can't. And so, do I really want to lock up my money for so long? I can't do that. But then you're missing out on the 30% IRR returns. So that gap is going to exist as long as the markets don't exist for normal people, whether they're accredited investor or even retail investors, to be able to trade on that liquidity. So I'm very much looking forward to what Linqto will do and what other companies will do to create liquidity for early stage investments.
And just to add to that one quick thing, which is it's not quite there yet. This is a future outlook thing. I know our session's then and now. But
now and tomorrow.
Yeah, now and tomorrow. We changed it. I forgot about that. We're going with the theme. Rhett and a few others changed it, but it's not quite mature enough yet. But I think in terms of outlook, we're getting there. We're getting closer to there. And the market, all of us up here, you guys there, we're all trying to push that forward.
I'm assuming the majority of the room owns real estate. Everyone owns real estate, right?
To some degree.
Income, properties, et cetera, et cetera. How is blockchain, how is your company, how are some of these innovations going to help us monetize that without, obviously we're collecting rental revenue, but how do we monetize even further?
That's a great question. So you have to, the question can be divided up into two aspects. You can have your residential real estate, which is maybe your single family home, you have your 30-year mortgage, whatever that is. Maybe you have residential multifamily assets. Perhaps you have commercial projects. Maybe you own a small office building, or you own a collection of them, maybe a business park, or you own a massive development. Maybe it's like you said, 10 to 15-year development project. So not to not answer the question, but there's a lot of different asset classes within all of those classifications that I just gave. So in terms of specification of which asset is most important, I'll just go with residential, maybe multifamily or single family home. For me, there's a lot of new companies that are coming out that are trying to take advantage of this word tokenization, right? security token offering. If you guys have heard of it, if you haven't, I would highly encourage you to look it up as a concept. And there are a lot of companies that are trying to make it work, to try and bring liquidity to your either investments or to your single family home. And what we're seeing now is companies like Proppy, and I guess I won't go through the list of all the companies, but
why not? Go for it.
yeah, everyone take your notes out and write these ones down. But the answer is that I actually don't have a specific, hey, do this and it's going to work for you, because everyone's situation is different. So did that answer your question?
No, but it's okay.
I'll take a piece of it. So what we saw in Fintech 2.0 was the rise of crowdfunding platforms for real estate like Fundrise. And so if you can't, yeah, exactly. So you can't, right? You can't buy your own office park, but you can buy a piece of an office park. The trick to that is that whoever is the sponsor of that deal is setting the terms about when you can get your money back out, which might be 4 or 5 years. I mean, you'll get some income off of it.
Could be longer.
Could be longer,
yeah.
But you can't get your equity back out. And with the rise of tokens, which are securities, you're now able to have more fine-grained investment opportunities into real estate. And it's cost effective to create a secondary market in those things where it wasn't prior to the idea of tokens.
So in terms of, to go off what you said, and that was perfect, access, the concept of access of fractional ownership. So instead of having to, you have to go in and purchase, whether it's a really expensive, it could be an NFT, or it could be a Bored Ape or an Xpunks or something like that, where you can't access that because maybe you don't have the financial ability to do so. There's the opportunity for fractional ownership, and that applies to real estate as well. You have the ability, sort of a new fintech disruption of the timeshare concept. You can buy a week out of 52 years.
What about the other way around? I just bought a property in the UK. It's an income property. Now I want to monetize it. I mean, I could obviously sell it, but what else could I do? Can I fractionally refinance it?
Of course. You can, yeah.
Yeah. Where do I go to do that?
Well, I'm personally connected. I'm going to plug a man named Ian Ferreira here. He was a couple years ago part of the Berkeley Blockchain Accelerator at UC Berkeley in San Francisco. He has a company called Liquid Mortgage, and they are doing just that. So I will save the pitch of telling you what he specifically does, but I really want to recommend, if you're interested in this, and you specifically, Liquid Mortgage. Yeah, check that out. But there are plenty of opportunities. So if you have debt and you have equity, or you just have all equity in your home, you have the opportunity to split that equity up into fractional pieces, and you could choose to sell $1 to me, you could sell $100, or whatever fractional piece that you want to. Maybe you need to go and you want to make it, Linqto has a wonderful offering that they've just posted, and you'd like to take advantage of that, and it's going to cost you $100,000 to do that. You could then go liquidate a portion of that property that you have in the UK, and then you could go make that investment. And it goes to Mike's point about momentum, and what happens is when you're able to do that, right? There's liquidity there, there's a platform, there's someone on the other end that's willing to buy that $100,000 slice of your property. It allows you to then make another investment, and the compounding effects of that are going to be tremendous for this space.
So opening up to the audience, comments, questions, your insights, names that you want to give. Here's a microphone.
Yeah, thank you all. So my question is probably for Mike to start, but then really the whole panel comes back to something you were talking about at the beginning with this transition of FinTech 1, 2, 3. So you mentioned DeFi at the end there. So I'm curious what you think of the interplay between CDeFi, as some people call it, and DeFi, and if really the future of FinTech will be a fully decentralized financial system, or if there'll still be room for more centralized players.
Okay, so CeFi refers to centralized finance in a tokenized world. So as an example, think of Coinbase, which is a single entity that operates as an exchange, similar to the way that NASDAQ or NYSE operates. And DeFi, decentralized finance, If any of you have ever heard of a company called Uniswap or DYDX, these are decentralized exchanges. I think, so what happens generally with innovation is you get a new technology, startups start playing with it, there's early customer adoption, then some incumbents start embracing that technology, and you hit sort of an inflection point where everyone who has embraced the new technology dies, and there's a new normal made up of incumbents that embrace the new technology and startups that have gotten to scale. And I see that happening with CeFi as one form of technology, and what you see going on now is a lot of banks beginning to introduce CeFi-based products for their customers. And the same thing is happening with DeFi, and it's happening a lot faster than it did with CeFi. So it's right, it's bringing, because of, there's what, about 1 billion CeFi wallets globally now. So there's actually customers for banks to make money on right now. And now that they've seen that happen over the last 5 years, they're saying, oh, we need DeFi products as well. So I see them coexisting. Sorry, long answer, but coexisting.
Another question, comments, insights?
We have space for 2 more questions.
2 more questions.
I'll make my answer
Anyone?
shorter.
Okay. Back there. The microphone.
My question has to do with stablecoins and the future of stablecoins within the DeFi, as you guys described it, the Fintech 3.0 environment in DeFi. Do you see stablecoin regulation as a good thing? And what role do you think stablecoins will take as DeFi evolves from its current form of not fully backed and or regulated stablecoins?
To avoid things like the Tether, Terra, Luna issue, I think that regulation is a good thing. And by creating sort of clarity about what is and what is not allowed, entrepreneurs figure out how to grow giant businesses in that which is allowed.
And just to add to that as well, in crypto, we want to make money. And so researching stable coins is not the sexiest thing to do. It's something I did do because I'm a little geek at heart. And I understand the different types of stable coins. And if you don't, I recommend, if anything, if the Luna situation didn't motivate you to, please research the difference between stable coins because they're not all equal. It's worth it because, especially if you're in crypto, you're taking your on-risk position and you're putting it into off-risk, into a stable coin position, presumably. And so you do not want to put your off-risk investment into something which you truly don't understand what it is. You're just doing it because USDC works with Hedera or Stellar, or USDT because it's got the most trading pairs. Really understand stable coins. You're not going to make money, but you'll protect your money. And that's exactly what we use stable coins for, in my opinion. So some boring research for everyone. I'm sorry.
So not all stablecoins are created equal. Gotcha. Last question, last comment.
With DeFi, do you think that as it evolves like a lot faster than CeFi, just because there seems to be a lot more people in it, do you see it as being more and more of a threat to CeFi and to banking as the years go on? Because it does evolve a lot faster and the yields can be a lot higher. Obviously, with that comes larger risks, as we've seen. But I think it seems as though it's quite a threat. What do you think about that as compared to CeFi?
Threat, in my opinion, threat can mean a lot of different things. I think what you are identifying is the extra yields you get for being an early adopter when you need to essentially be a gearhead to figure out how to trade DeFi, right? The customer experience for CeFi is barely acceptable, and DeFi is horrendous. But if you're willing to learn how to do it, for the moment, you can get outsized yields, but it'll all equalize over time. That's what I think.
Basic economic theory, right?
It's funny that.
Yeah, as more enter, then the yields will.
Well, thank you, everybody. I think we're all going to be around, so I'm sure there are a lot more insights and questions. So please, let's have some more conversations. Over to you.
Jim, wait.
Yeah, wait.
Thank you for moderating when you are actually a panelist.
No.
Great job.
You guys don't have to say anything.